Good morning, ladies and gentlemen. My name is Chris Reid. I am the CEO and Managing Director of ASX listed project developer Neometals. Today, I'll talk about how we're decarbonising the critical raw material supply chains with our main project, a lithium battery recycling project. We are listed on the Australian Stock Exchange, so we'll draw your attention to the disclaimer. So Neometals innovatively develops opportunities in minerals and advanced materials essential for a sustainable future. So the common part, we've got 4 main projects, all with a common link to commodities that underpin the transition to EVs and stationary energy storage. We have partners for all our projects, which is important, and we've pivoted away from being traditional hard rock mining to more eco-friendly materials recovery. The EU, and that's where we've got a clear focus, is such a fertile ground for projects that can show resource efficiency, circularity, and to build domestic supply chains. We've got a very strong team, and we've developed a very good track record in delivering project outcomes, especially Mount Marion, where we developed with a couple of big multi-billion-dollar companies the Mount Marion lithium project into what is today the second largest source of hard rock lithium concentrates in the world. We've got a future-proofed balance sheet. We did a staged sellout of that project, harvesting around $200 million off a $3 million investment, and that's enabled us to return $55 million in dividends back to our shareholders in the last 5 years, as well as to undertake some on-market purchases. So I think Neometals provides unparalleled exposure to this new energy or energy storage megatrend. So essentially what we've got in our main projects is exposure to graphite, lithium, cobalt, and nickel, courtesy of the lithium battery recycling project. And we've also got a vanadium project, which is looking to process the highest known grade feedstocks in the world, which is stockpiled adjacent to a large Scandinavian steelmaker. In terms of, like I said, we've got a fantastic balance sheet. It's our people that I think are probably our greatest asset. So we've got very experienced board across all the necessary skills to execute a very ambitious business plan supported by a very, very capable management team. In terms of a corporate dashboard, we are starting to get a little bit of love from the market, which is good. We have approximately $83 million in cash and listed investments against an EV of about 122 million. The board and management are the largest shareholders in the company. And, we've got a real commitment to sustainability. I mean, it's a bit of a buzzword at the moment, but we fundamentally pivoted our business away from more upstream mining and looking further down the value chain and indeed closing the loop at the end of the life. And so we are committed to making the most out of finite resources or finite natural resources. So we do have genuine conviction. We actually not only talk the talk, but we actually walk the talk. So we'll focus today on the lithium-ion battery recycling project. So we'll just go through, some really high-level bits. I'll try to keep it, pretty graphic. So you have a look at these batteries. 811 is going to be the predominant EV. So for a 60 kilowatt, which is a sort of standard car, you've got 27 kilos of cobalt, 6 kilos of lithium, 23 kilos of nickel, and 3 kilos of, the 27 was copper, and 3 kilos of cobalt. So this is on a per ton of these spent batteries, it's about 15% copper, 15% nickel, a couple of percent cobalt, and a couple of percent nickel. And so, you've got this fantastic high-grade concentrate. And as we can see, there's this massive build-out of lithium-ion battery capacity around the world. It then follows on a lag basis. So we're going to have incredible amounts of batteries at the end of their life that will need to be recycled. And so this massive increase in lithium-ion battery production is actually going to multiply the supply risk. If we have a look at, we can see from left to right there, you know, the biggest affected, you know, we're going to take lithium from 319,000 tons LCE to over 2 million. Graphite, cobalt from 129 to 406. Where does it come from? Nickel, 200,000 tons to 1.6. At 1.6 million tons, that'd be 80% of the normal nickel market. So never before have we had and known with such great accuracy what the impact on these commodities is going to be. So we develop this battery recycling process. So if we have a look at our stage 1 plant, we get the batteries, shred them up, put them in a processing plant, and essentially get back these metals as high purity sulfates that is able to be reused in the production of new batteries. And so you really know, we call it lithium-ion battery recycling, but think of it really as a high purity battery chemical refinery. Another trend is this massive increase in lithium battery production is going to cause a massive increase in the carbon footprint. Now, we know over the life of a vehicle that the EVs have much less carbon. That's because they don't burn gas or diesel. But in the construction of them, they start with a significant footprint, and that's because of the battery. There's no difference in the car. It just has a different means of power, and it's the battery. And within the battery, it is the battery materials. We mine spodumene or lithium concentrates from Australia. They go and get processed in China. They then go into Europe. You've got cobalt that gets mined in the DRC and flown to China as a hydroxide that then goes back to Europe as a cathode. So you've got these exotic materials that come from exotic parts of the world, and they're just way too valuable to put back into the ground as landfill. So the solution to try to decarbonize this megatrend is actually to move into recycling, and not only just any type of recycling, into hydrometallurgical recycling. And we can see there, for every ton of new batteries, about 8 tons of CO2 if you use raw mine material, halving if you use conventional pyrometallurgy, which is smelting it like the guys at Umicore and Glencore do. If we actually dissolve it in an acidic solution and precipitate out high purity chemicals, we can take that down to 200 to 300 kilograms per ton of battery feed and really make a significant difference in the world. So our process, we successfully piloted this at SGS in Canada in 2019 and finished in April 2020. And so essentially we can take prismatic, pouch or cylindrical batteries. We can take them in fully charged, partially charged or discharged form. We safely shred those and remove out the plastic separators, the steel casings, the plastic casings, and the aluminium and copper foil that the anode and cathode are glued to. We then take this black mass and dissolve it in acid, and then we sequentially take out the valuable cathode materials, the nickel, cobalt, manganese. The lithium is in a solution that we can take out whatever the battery makers want. Some want carbonate, some want hydroxide. And then we're left with graphite, which is, you know, carbon. And that's the negative of the anode part of the battery. And that's able to be reused. We're investigating for reuse in batteries, but at this stage, it'll just displace traditionally mined materials in other applications. So we've got a processing solution, but we have to have a delivery solution to supply this into the market. And so what we did this year is we entered into an agreement with German global engineering and plant constructor SMS Group. So they're 130 years old, privately owned, 14,500 employees in 95 sites around the world. I can't think of a better partner to actually deliver what's been a fantastic R&D success for Neometals. So we've incorporated a German joint venture. We own that 50-50, Primobius GmbH. We're currently building a showcase demonstration plant in Germany at Hilkenbach, which is their hometown. And we're evaluating both 20,000 starter plant, which generally is designed to take 10% of the material, which comes out as off spec. The other 90%, we have to plan for it into life. And hence why we look at stepping that up to 200,000 tons. So SMS will build, operate and procure debt on a best endeavors basis on behalf of the joint venture. And they're there to build not one small little 20,000 ton plant. We want to build lots of plants and lots of big plants. So we're very, very happy with them as our delivery partner for this technology. The demonstration plant, you'll see the design there on the top left, the dedicated 2,000 square metre facility in Hilkenbach, which is just below it. And we've decided to put it in Hilkenbach because, you know, Germany is the centre of EU lithium battery production. And in fact, you know, the German car industry is underpinning a lot of that build out. You've got around 500 gigawatt hours of plant. To put that into perspective, the gigafactory of Tesla is 35 gigawatt hours. So it's fantastic. And so what we'll do there is it'll allow customers to bring their car makers, cell makers to bring their products. We'll be able to shred them, put them through the facility, and actually give them back their own chemicals to get feedback from their cathode makers. Why Europe? Well, I said why we're located in Germany now. Why are we targeting Europe? Because it has been the sort of home of investment, and the build out in the supply chain in Europe has been 3.5 times that of China. The Chinese started early, no doubt about that. And in securing a lot of these raw material feeds, they dominate 2/3 of all the feedstock. So we need to recycle just to make sure that we don't have to keep relying on new stuff from China all the time. And, you know, it's a fantastic build out. And then it follows that, you know, Europe is the second largest market globally in terms of cell making capacity, and indeed cars, and indeed the end of life batteries. And we can model that here. You'll see these massive growing volumes in green, which are the end of life batteries. And so we want to be first movers in terms of size and scale, and hence why we've partnered with SMS Group. You know, we have a look at some of our competitors in Europe. They're smaller plants. The largest one's about 7,000 tonnes. Our first plant, we own a commercial front end, which will do 20,000 tonnes of shredding. The demonstration plant is really for the hydromet back end, and then we will scale that up as we get commercial arrangements for feedstock supply. And the good thing for us is that we get robust economics on all major EV battery chemistries that will be produced in Europe. And also consumer electronics. You know, from our scoping study, what we've done there is put the in situ value of the different batteries per tonne at spot rates. And you can see there's very, very good margin. Some of the margins there, look, I think, you know, if you ever get a project that you can operate at the bottom of the cost curves and have very quick paybacks with modest capital, the trick there is to see if you can multiply that. Generally, you know, a natural resource, you can't, but this is more an industrial business, and we want to build multiple plants and multiple large plants so we can scale that up, and we expect significant economies, so further reduced OPEX as we scale up to 200,000 tonnes per annum. And that partnership with SMS has allowed us to get our first MOU with a battery maker, INOBAT, which is a Slovakian company. They're part of IPM Group, which has secured partnerships with CEZ, which is a leading Czech power company, MOL, which is the old Hungarian national oil and gas, now a big multinational, and several sovereign wealth funds. So what we're looking at is collectively, you know, we bring the solve. They've got a battery plant that is in production now. They are scaling that up to 10 gigawatt hours. That'll provide the base load feedstock. And we're evaluating this hub and spoke where, you know, you'll put a spoke, which will be the shredding plant, next to their battery making facility in Slovakia. And then we'll have a look in other jurisdictions in Eastern Europe to source additional feedstock. And we're looking at a 20,000 tonne plant there initially. So I guess, you know, in short, recycling is not optional. You know, there is just a significant need for it. You know, they're hazardous, a fire risk, they're hard to store, they're hard to transport across borders, they're hard to dispose. You wouldn't put it in a landfill. A lot of those base metals are in an oxide form in the batteries and can leach into the water. So, you know, if we're serious about decarbonising and reaching our greenhouse goal targets, you know, the only way to remove the footprints, I mean, we're always going to need to mine. We need to make those flow sheets greener. But in the interim, recycling is certainly the most effective means to reduce the footprint. As far as Europe goes, you know, recycling will complement the virgin mineral resources, But it will really close the loop, this whole circular economy. So, in terms of securing the supply chain, more ethical supply certainty, and, building an entire ecosystem around that, that can make money. So, we're very, very happy with that, which has been a fantastic journey over the last 3 or 4 years. And, look, that's just one of our projects. We have a clear focus on our advanced materials projects, so lithium, vanadium recovery, and the lithium refinery project, where we're looking to downstream process our lithium concentrates that we have an option for life of mine from Mount Marion. Also got a titanium vanadium project in Australia. And we've also got a pretty handy nickel project with just under 150,000 tonnes of contained nickel metal in 12 nickel sulfide deposits. So I encourage you to visit our website, neometals.com.au, to find out more about our projects. And so I think if I would leave you with anything today, I think we're a pretty good combination of security and opportunity. And look, my family started in mining more than 100 years ago. My father and I founded the company in 2001. We offer security. We've got a strong balance sheet, no debt, and we can fund our projects through to final investment decisions with our partners, and in some cases to put those into commercial operations without the need for external financing. We've tried to minimize the traditional mining risk. We've got a fantastic board and management team who love executing projects and build it. We've built a number of mines as a company, and a lot of the management has built a multiple of those mines for the different work for their different previous employers. We've got a consistent strategy. What we try to do is identify the mega trends that we want to be in to try to take out some of that cyclical nature. That then distills the commodities that we want to be in, the projects we want to be in. We go in early. We got into lithium in 2009, developed in 2015, and we're out. We agreed to sell December 2018 before settling in April. And we know that the lithium prices since then, certainly for spodumene, reduced by 60 or 70%. So what we try to do is get in early, build the value with the drill bit in the test laboratory, make the pie bigger, and then try to bring in partners to bake the pie and to eat the pie, essentially, in terms of, they can develop it at scales that we couldn't. So the optimal scale, what we try to do is build it at the optimal size and the optimal structure to invest the smallest amount of cash that we can to extract the fastest returns. And that's enabled us to return significant value to the shareholders. And I think, the opportunity there, we're in green critical materials for Europe. We've got a business built around resource efficiency for the circular economy. Across our portfolio, we've got multiple catalysts in terms of demonstration plants, feasibility studies, commercial arrangements. And we have transitioned to really embrace the whole mantra of ESG and making our business much more sustainable in the long term. And look, we are the largest shareholders. We like making money, and we've got a history of returning that cash back to the shareholders. So I'd like to thank you very, very much for listening to me today. I wish you to keep safe and well in these interesting times, and to check out neometals.com.au. Thank you very much.